Good evening. Ira Epstein of Linn and Associates with your metal market wrap-up, and this wrap-up is for Thursday, the 25th of March, 2021. I'm going to be starting to change some of the charts that we cover here. I've gotten too comfortable doing the same things all the time. The reality is I cover all the metals in my subscriber video. These are free, so I'm going to be doing different things with these. And the real meat, as I always told you, is in the subscriber video that you just go to iraepstein.com. Up at the word research, it's all there. So today was all about the market getting through a 7-year auction. We saw a number of products, fourth quarter GDPs coming out, things of that nature. No shakeups at all. President Biden held his first news conference, very different than the style that President Trump had. Same problems, just a different voice. That's how I'm reading it. Filibuster could be in trouble in the U.S. We'll see what goes on there. But if you looked at the markets, you came down today to a lot of key numbers and stock indices they held. In the metal markets, the dollar just continues to climb, so they're trying to overcome the stronger dollar. Still very much a mixed bag as we take a look over here. Now, from time to time, I'm not going to lead you off with gold. I'll be doing copper from every now and then. I'll drop silver occasionally. I've today dropped platinum and palladium. No reason, just making them a little shorter, bring other things on. And as I said, if you're looking for the consistency, it's in the subscriber video. So we look at the gold market. The one thing I see is the market is having great difficulty getting itself up and holding. For the week, it's down 0.9%, not very much, down about $15 for the week right now. The market, as I told you, is going in a sideways action, and today was important. Why? You have an outside day down. To me, an outside day is a real important tool. If you take out the high of an outside day within 2 trading days, it is normally a sign that the market wants to make a run the other way. I'll call that then a bear trap because the market had the big range and it went to the downside. And if it loses that, where do you think I think it might go? Well, we first take a look at what the trend is doing. The swing line is up. I haven't forgot what I just said. If you take that out, well, if you go to the 100-day average, that's pretty far away. The 18-day average is below the market, so that's going to leave me with a choice here. It's probably going to be the Bollinger Band, and that number would be 1751.40. So the high of the day today turned out to be 1744.80. For those of you that are getting my morning subscriber video, as gold was rallying, I went, I don't get why gold is rallying. It doesn't make any sense. And I was trying to tell traders if they had bought into this area, it might be a good area for them. And these are the paid subscribers to protect what they've got made. That's what I thought. And as it turned out, that's pretty much it. So if you get under the 1722.80, and you follow down, you might be headed to 1691. But a bigger picture is developing. You have all the hallmarks of trying to develop sideways now action that just spins around in a tightening Bollinger Band as the market develops either a base or a top, depending on your point of view. As we go to the next chart here, you can see that momentum is corrected from an overbought condition. It's not overbought. In defining the chart right here, you have a current pattern of higher lows, higher highs. The battleground's going to be the 18-day average, and if you get under 1722.30, you lose the swing line pattern of higher lows, higher highs, which means you probably just continue in that wishy-washy pattern. In terms of the silver market, silver went down today, hit the combination of the 100-day average, the lower Bollinger Band. If you're pushing to get beyond that very much, I wish you the best. There are guys like me that will wait out there and tell our clientele, I don't think that's the best move that person can make. And by the end of the day, that was the case. More or less what I see going on is the market's caught now within all these moving averages, the 18, the 100 in this. You might get a bearish crossover where the 18 gets under the 100-day over the next few days. That would not be a pretty picture either. So if silver's going to get real good, it's got to do something here. Right now it's not trending. It's got that pattern of a higher high, lower low, and it's causing pain for those that thought, oh, I can hang on and the silver can go higher. I don't think it's given the bears a lot of pain. In the copper market, I've been expecting sideways action. I've been preaching that here, telling you I think you're just going to whip around, and you are. You've got the higher high, the lower low, caught in these Bollinger Bands, momentum pointing down right here. What do I teach when you hit the Bollinger Band? That's where I think the pros are taking their money off the table, a big chunk of it, if not all of it. Let me come back here to the platinum market. I thought I took this one off. That's why. My mistake. I'm going to. Lower highs, lower lows. You can see how the market's fighting at the 18-day average. The trend is down. The bias is down, but you are in oversold territory with the reading under 30 now. So I'm going to look for this market not to catch the normal heavy selling it would on a rally with a downtrend because it's oversold. Should it break further, I look for the pros to be very aggressive and taking some money off the table. Again, in the autos, you got to start thinking, and that platinum and palladium are very important to that. In the autos, what's going to happen? Eventually, the word is eventually, the COVID situation gets resolved in Europe, India, other countries. We here, when we get beyond this microchip issue, we want to produce more cars, there'll be more demand. But without that demand, then they're shutting down production lines or vehicle models in some cases as well. You're just seeing these markets under that pressure. We get to the dollar index. You can see that it went up to the upper Bollinger Band. I don't care what other traders do. That's often where the market starts running out of its momentum. Now, if it embeds with both numbers of the slow stochastic going sideways over 80 for several days, I'll change my opinion. You're not there. You're just in an overbought area. I missed a chart here. The April Ethereum. I'm starting to get enough data just at the beginning to cover it. If you go back here, you can see this started trading, I think it was in February. So we're just getting the play for it. What is the market? It's in a downtrend. Lower highs, lower lows. A potential target here could be the lower Bollinger Band. Number at this 1530.5. The resistance in the chart, 1747.90. We do trade this. So if you're interested in trading this, you can call my brokers. They'll be happy to work with you. As I told you, I have finished up my online course. We don't want to put it out before the beginning of the week of next week. We want to be around if anything happens online that you need help and so on. I want to remind you that I am going to offer a discount to paid subscribers of that. So the normal price I've already determined is going to be $75. You will pay $60 if you are a paid subscriber. And I'm going to be offering discounts. I'll be going back to my webinars and everything as I finish up these courses. This has been a dream that I wanted to do for about a month. It took longer than we wanted because we were working on the morning regular videos with new software, which we accomplished. Now, from the time that I finished that morning video, the paid subscribers, to the time it's posted on the website, about 3 minutes. We were 40 up until this new product and new computers to make it all go that fast. So you can see where we're at with this. I'm Ira Epstein. Go to our website, visit all our products at www.iraepstein.com, and I'll see you tomorrow.